Powell maintains that we only have 6 years to fully capitalize on the opportunities the cryptocurrency sector brings, but he cautions that the world will still be very different from what it is today. In a conversation with Imran Laka and David Matten on the Real Vision YouTube channel, Powell addresses the future of artificial general intelligence, or AGI, and provides a significant update on the cryptocurrency market. Please take a moment to like this video, subscribe to the channel, and enable post alerts for more videos similar to this one as we show you snippets from the film. Regards and have fun with the video. If we consider liquidity to be the largest, tech and cryptocurrency are growth assets, and they are drivers of risk assets in general. Recall that they were the leaders of the cycle, because, unlike the Russell 2000 oil businesses and gold miners, they are motivated by liquidity rather than the business cycle itself. All of them are influenced by the business cycle, and as we can see, the ISM is currently having difficulty rising. Afterward, there will be an upswing and cyclical equities will perform well. By more than a year, technology way ahead of that. In its most basic form, Fed net liquidity is what drives its liquidity in the US. The balance sheet is the main motivator. Is it going up or down? Since they're in QT at the moment, they're removing liquidity from the system, but the reverse repo balances that out. That has been depleted by them. The short end of the bond market is where that money is invested. This has been increasing liquidity more than offsetting the Federal Reserve. And there's Janet Yellen and the Treasury General account, which is her checkbook. That is the account as of right now. Due to last year's rather strong economic growth and the comparatively large tax season, we experienced this liquidity withdrawal from the system. These taxes are deducted from Janet's checking accounts and placed in money market funds. Since Janet hasn't spent them yet, they can no longer be used. That cash is extracted from the system. That is an outflow of liquidity. It was the reason why technology and cryptocurrency were declining. Then, there are two crucial elements to yesterday's events. One is that Jay Powell stated, "Hey, listen folks, we're not quite ready to lower rates just yet. However, we will not be raising them. Instead, we will significantly reduce the amount of quantitative tightening from $60 billion to $25 billion. If you picture the Fed placing its head on a beach ball, then you pull it off. And it rises. That is how quantitative tightening works. He's making room for liquidity. Conversely, Yellen declared that she would purchase some of these illiquid bonds from the long end of the bond market. These illiquid bonds are only a way to recycle liquidity into a less liquid component while still supplying liquidity to the market. They both indicated that they wanted to add liquidity in this area. That was excellent. The Japanese took over. They are selling dollars, selling liquidity intervention. A significant amount of liquidity returned. The idea is that liquidity was released as we witnessed the markets declining. In the crypto world, what transpired today and yesterday was quickly seen as a return of liquidity. That is the main motivator here. I have stated in the Everything Code work that in order for the statistics to make sense, all central banks must collaborate, bring interest rates down, and inject liquidity in order to finance their government's obligations. That's the real game that's being played here. All other content is essentially noise. It is widely accepted and undeniable that the international monetary system is unsustainable and perched precariously on the brink of total catastrophe. Both proponents of sound money and financial analysts concur that the fiat system will eventually become outdated and that the amount of debt in the world has grown too great. Powell thinks that greater productivity, which can be scaled exponentially with AI and robotics, is the only practical way to address this worldwide issue. As a macroanalyst and entrepreneur, my job is to live in the future and assess how the world might appear and a probabilistic road to get there. This is according to a recent post I saw on the social networking platform X by the former Goldman Sachs executive. I think that in the next 6 years, artificial general intelligence AGI models will become more powerful and less expensive. Artificial intelligence and unlimited knowledge workers will usher in a golden age of technological productivity. In that universe, what even constitutes an economy? GDP, what is it? What happens if AGI is trained on international markets? In theory, they will be able to take all of the value. What happens if everyone starts constructing businesses with AGI models? There will be an extraordinary rate of business creation and dissolution. In the conversation with Matten and Laka, the CEO of Real Vision goes into additional detail about what lies ahead and why it's critical to get ready now by making cryptocurrency investments. More snippets from the interview are shown here. I've told a lot of people that rising debt, productivity, and population all contribute to GDP growth. In 2008, debt growth ceased. All that's left is paying off previous debts. The population of China, Southeast Asia, and the whole Western world is either declining or slowing down. Thus, growth is slowing down. We are deeply in debt. That's the main issue we have. In order to deal with it, they have begun debasing money. However, AI, or the unlimited knowledge of the human intellect, exists. David frequently writes about this. The state of knowledge will resemble water. It is going to be widely available and free. There will be robots everywhere, be it Optimus Figure or any other robot that Amazon chooses to use. Finally, a Tesla is basically a robot car with artificial intelligence. That implies that an economy can have infinite population expansion. What the devil does infinite population increase mean in terms of GDP growth? Additionally, if you reduce the previously discussed electricity cost, productivity growth will increase. Thus, you begin to see absurd results about the economy. When AG arrives, what happens? The AI that sees and knows everything. At that point, what are financial markets? The AGI undoubtedly dominates all financial markets. What role does David, me, or Imran have in that world? No, we don't. How does that affect the investments you make? When anyone can instantly replicate your firm using an AI or AGI, what does it truly mean to be a business owner? When you could say, hey, check out this website, and it would work. When you give the AI the role and say, hey, you're an AG, figure out how to make money, you can eliminate the need for humans to make judgments altogether. This is all really complicated, and it's happening very quickly. I believe that by 2030, economic concepts will be out of date and we will be living in a world that no one can possibly comprehend. In a world of limitless abundance, I have no idea what money is. Having said that, 2030 is not a date of doom. There will be a process involved in getting there, but by 2030, things will start to feel quite strange. That will not feel comfortable. On the other hand, the economy and possibly the stock market will both be seeing tremendous growth, but in the interim, for the next 6 years, any of us can profit from technology or cryptocurrency. Let's take advantage of the greatest technological advancement in human history to make an incredible amount of money. We have tomorrow to worry about. Worrying about it in a cubicle office at an Ohio insurance firm is not something I'd prefer do than on the beach. The theory advanced by Powell regarding the impending exponential age of technology developments is very similar to whereas